When it comes to the retail investor, a few sectors have as rabid of a following as the uranium sector. And the leader of that sector, at least in terms of the Canadian market, is Cameco, who reported their third quarter results on November 7th. And if there were ever someone looking for the definition of a mixed bag of results, well, there would be no better definition than Cameco's Q3 2024 results. They've managed to miss analyst estimates, but they've raised the dividend. Production at their Inkai JV is down, but the overall production outlook has been raised. Net earnings are down, but adjusted EBITDA is up. They're all over the place performance-wise. Anyways, we're finally getting caught up on our earnings coverage from last week, and this is a big one. Folks, we're talking Cameco, we're talking uranium, we're talking Q3 earnings, we're talking Q3 earnings season. Folks, let's dive in. Okay, so let's start with the high level. Cameco in the third quarter reported top-line revenue of $721 million. The figure represents a 25% increase on a year-over-year basis. However, it still came up short of analyst expectations of $751 million. While revenue was up by 25%, gross profit only improved 13%, climbing to $171 million from $152. Despite the top-line improvements, net earnings cratered by 95%. Falling from $148 million or 34 cents a share to just $7 million or 2 cents a share. On an adjusted basis, net earnings sunk even lower to a loss of $3 million or 1 cent a share. Analysts comparatively were calling for 25 cents per share. The massive loss here is attributed to Cameco's Westinghouse segment, which is accounted for using the equity method due to Cameco's 49% interest. While Westinghouse recorded revenue of $726 million in the third quarter on an attributable basis, it ultimately posted a net loss of $57 million on an attributable basis, heavily impacting Cameco's earnings on a non-cash basis. Adjusted EBITDA, meanwhile, came in at $308 million, a 32% improvement year over year. Cash provided by operations sunk 72% in the third quarter, dropping from $185 million to $52. As of the quarter end, Cameco had $197 million in cash and cash equivalents, down substantially from the $362 million at the end of the second quarter. Debt, however, dropped to $1.2 billion, with the company making a US $100 million debt repayment during the quarter. Cameco also declared a 16-cent annual dividend for shareholders of record on November 27, 2024, a 4% increase over 2023. Okay, so let's get into the segments a bit here. Let's start with the segment everyone is here for, uranium. The segment saw production of 4.3 million pounds in the third quarter, a 43% improvement year over year. Those pounds were produced at an average cost of $39.61 a pound. The segment, however, sold 7.3 million pounds, a 4% improvement from the 7 million sold last year. Now, if you're paying attention, you should be questioning the differential between production and sales. That differential comes partially from purchase pounds, which totaled 1.8 million pounds in Q3 versus 0.8 million pounds last year. While shareholders will be quick to say that this is simply a function of Cameco accounting for uranium produced at its Inkai joint venture as purchase pounds, the footnote clearly states that no pounds were purchased during the quarter from Inkai. Year to date, the company has purchased 6.2 million pounds, of which only 1.2 million were from Inkai. Oh, and those pounds were purchased at an average price of $109.59. On a blended basis, this brought the average cost of uranium up to $60.26 a pound. The segment, meanwhile, sold uranium at an average price of $82.33 a pound. There's nothing quite like selling something for less than you bought it for as a business strategy. Anyways, the segment recorded top-line revenue of $600 million, a 23% improvement year over year, while posting earnings before tax of $171 million, a 22% decline year over year. The fuel services segment, meanwhile, saw the production of 3.2 million kilograms of uranium, a 60% improvement from the 2 million produced in the same quarter last year. Sales volumes crept up to 3.5 million kilograms of uranium, a 67% improvement. The average realized price came in at $34.54 per kilo, resulting in revenue of $120 million for the segment, a 40% improvement, while earnings before tax totaled $17 million, a 39% decline year over year. Again, these are those mixed results we were talking about earlier. Lastly is the Westinghouse segment, which we previously addressed, with Cameco seeing its share record $726 million in revenue and a net loss of $57 million. There's no comps here as the acquisition closed in November of 2023. Okay, let's get into the outlook. The forward guidance released in conjunction with Cameco's third quarter results was one of the brighter parts of the entire release. That is aside from the Inkai JV, where the company is forecasting that 600,000 fewer pounds will be produced in 2024 versus 2023. Production was originally forecasted to come in at 8.3 million pounds. However, that figure is now reduced to 7.7 million pounds. Cameco also has a problem here in terms of actually receiving their portion of production. The first shipment of 2.3 million pounds has been received by Cameco at a Canadian port, but the company states that the timing for receiving the remainder of their cut of production is uncertain, and that their allocation for the portion of this year's planned production remains under discussion. Whatever that means. Shortfalls, meanwhile, have been blamed on the inability to procure enough sulfuric acid. Inkai aside, however, Cameco has actually increased their production forecast for 2024. The company now anticipates producing 23.1 million pounds of uranium in 2024, up from prior guidance of 22.4 million pounds, a 700,000 pound increase despite the shortfall of 600,000 expected at Inkai. The improvement is being credited to the McArthur River Key Lake asset, which has seen strong production in 2024. And that increase is said to be fully committed within Cameco's contract portfolio. On the financial side of things, the weakening Canadian dollar is expected to be a boon for fiscal 2024. Cameco previously worked under an exchange rate assumption of $1 being equal to $1.30 Canadian. Now we can thank Justin Trudeau and Tiff Macklem's mismanagement of the economy and the Canadian dollar, which has changed that assumption to the US dollar being equal to $1.35 Canadian. The impact here is that the expected uranium average realized price has increased to $77.90 per pound Canadian, up from $74.70. Consolidated revenue forecasts have been bumped from a midpoint of $2.9 billion to a midpoint of $3.1 billion, while the outlook for Cameco's share of Westinghouse's adjusted EBITDA has risen from a midpoint of $478 million to a midpoint of $495 million. I guess that's the benefit of being paid in US dollars while incurring costs in Canadian. And then on the return to shareholders side of things, Cameco has indicated that they intend to undertake a dividend growth plan with the aim to increase the annual dividend to 24 cents by 2026. This is to be implemented by conducting a 4-cent hike to the dividend every year from current levels, with the resulting impact being that the dividend will be doubled from the 2023 level by 2026. Lastly, on the guidance front, Cameco has stated that they have delivery commitments averaging 29 million pounds annually from 2024 through 2028, with certain contracts that are in place spanning more than a decade. Given that the results were a mixed bag, well, the stock hasn't exactly enjoyed much excitement from the results. We're now multiple days removed from the release of the results, and after a bit of volatility, we're essentially flat. On the social media side of things, numerous investors highlighted the problems at Inkai, which have been ongoing for ages now, while others were just focused on the commentary related to the uranium market and how Cameco was positioning itself moving forward as the price of spot continues to move up. Analysts, meanwhile, were quick to raise targets on the company despite the mixed results, with National Bank moving their target from $85 to $87, Canaccord moving from $78 to $81, Raymond James moving from $79 to $81, and BMO going all the way from $78 to $84. Okay, so let's wrap it up. We told you at the start, and we stand by it. The quarter was a mixed bag. Yes, revenue improved, but gross profits didn't have near the same level of gain, meaning costs are rising. Production was up, but they still are forced to buy uranium to sell it at a loss to meet current contracts. And those current contracts are priced quite a bit below the current spot price of uranium. And this doesn't even include the fact that net earnings cratered year over year, despite the improved uranium environment. Cameco might be a market leader, but we're not exactly sure that they're acting like it. Guys, let us know what you think in the comment section. Do you think that Cameco is a must-own stock? And do you think that these earnings merited the increase in targets from the various investment banks? Do you want us to cover other uranium names? Guys, let us know what you think in the comment section. I will respond to every single one of your comments. And if you enjoyed this video, please smash that like button, subscribe, and ring that notification bell. All right, everybody, thank you for watching.